What is going on, SoFi fans? Welcome back to Financial Journey. So when it comes down to 2022 investing, that is now a thing of the past. 2023 is here, so I want to talk on all the bullish signals that made themselves very apparent for SoFi investors leading into 2023. So I'm going to go over all the stuff you need to know. Make sure you guys hit that thumbs up and subscribe. Always greatly appreciated. And with that, let's get right to it. On a side note, just want to start off by saying Happy New Year's, depending on when you guys are watching this. Hopefully there's a lot of prosperity and just good investing that does happen in 2023. But without further ado, let's get right to it. So when it comes down to options, obviously that can be seen as positives, negatives. I like to see, for instance, looking at these kind of charts, the intraday options and a lot of calls being purchased, definitely that is a very positive sign. When it comes down to this, as you see, this is the intraday from Friday, so December the 30th, last trading day for 2022. A lot of call options being purchased. Of course, that could mean a lot of different things, but if you do correspond that with, for instance, the most active chains, you do see a lot of long-term calls being purchased. 2024, 2025, $20 and $12 calls. So once again, behind the scenes, that is very positive. But yes, this is just intraday for one day, which of course might not really amount to anything. But once again, if you do correspond that with this kind of chart, the put/call ratio, that has just been going down, meaning there's been more and more calls being purchased behind the scenes. So that definitely is a very positive sign and very bullish, which of course, like I said, it does show that a lot of optimism is on SoFi's side, at least for the foreseeable future, whether you are, let's say, investing for 2024 or 2025. So once again, I see that as positive. Keep in mind, I'm not a financial advisor. Do your own due diligence at the end of the day. But moving on from here, upcoming, we do have our Q4 earnings, which most likely will be in February, beginning or mid, somewhere around there. But as you can see right here, I am on Interactive Brokers, and when it comes down to earnings, there are several different things that investors care about: earnings per share, revenue, and future guidance, which is all fine and dandy. But for instance, if you look right here, as of right now, there is 9 estimates from analysts. Previously, which as you can see, it says 3 months ago, there was 10. So one clearly did pull back their estimate, and it went from negative 10 cents to negative 9 cents as far as an estimate. So a bearish analyst, whoever that was, did pull out their actual estimate. So that also is a very positive sign. Clearly goes to show that they don't want to be wrong about SoFi. I think also looking at SoFi's earnings, it doesn't necessarily correspond or kind of mirror exactly with what has happened with the stock price, because generally speaking, the stock price has just gone down. I think we all know that, unfortunately, but the actual earnings have been very much home run. So very different and a little bit more of a divergence in kind of logic going on there. But once again, this analyst pulling their actual estimate on their earnings per share is a very positive sign in my own opinion. And of course, it is that time of season once again. So now a lot of ETFs, institutions are all going to be showing their disclosures to the SEC through various things, including the 13Fs. And as it shows right now, a lot of ETFs for the most part have really increased their position. So definitely that is a very positive sign. Goes to show that they do believe in SoFi bigger picture, and that during over the previous quarter, they've been accumulating shares. If you do also compare that information with this, which I do frequently like to bring up. So right now there is 59 ETFs that do hold SoFi. So clearly goes to show that's been increasing. Last update I gave, I believe it was around a month and a half ago, there was only 55. So clearly in the month and a half or 2 months, there was 4 new ETFs that did increase their position in SoFi. So once again, behind the scenes, institutions loving SoFi is a very positive thing. Of course, like I always say, these videos are for entertainment purposes only. I like to list a lot of the bullish signals. So for instance, if you don't find any relevance in the options activity, then disregard it. If you, for instance, like to look at the actual what institutions are doing and kind of mirror what they're doing, definitely that is a bullish sign. Again, for those of you that do watch my channel, you know I absolutely love technicals. This is also another very bullish signal that's happening and transitioning going into 2023. So on the actual chart, I have the 50, 100, 200-day moving averages, Bollinger Bands, RSI, stochastic, and momentum. So stochastic is at 35, still very much oversold. There is that deviation that did kind of make itself very apparent on Friday. So black line above the red, showing a bullish sentiment is kind of wanting to form. Momentum, number of retail investors have just been getting in. So that's always a very positive sign, especially behind the scenes with SoFi, I believe, is around 75% held by retail or somewhere around there. So definitely retail increasing their position even more is a very positive sign. Again, that could be left to your own interpretation. Sometimes that is good or bad. Of course, the bad aspect of that is any stocks that have a fairly high retail presence is really targeted by short. So I'll give you a brief update on that as well. RSI is currently at 49, and on the actual chart over the last couple of days, it did transition from the lower to the higher percentile of the Bollinger Band. So in reality, that's fairly good. And the next big resistance point that we do really have to face is that 50-day moving average, which is at $4.92. Coincidentally, that I believe is my average overall. I've been taking advantage of these discounted prices to lower my average. So I've been lowering it from, I think it was initially 10 to 8 to 7, 650. And I finally did get it down to $4.91, somewhere around there. So I'm pretty happy with my average going into 2023, especially more so with all these bullish signals that's made itself very apparent. And in a lot of my comments or in videos in general, a lot of people have been saying that there's a very much impending recession coming. And I really want to beg the question or kind of play devil's advocate, because there's a lot of individuals that just mirror exactly what institutions are doing and what they are saying. Because there's a lot of institutions, even BlackRock recently came out saying that technically there's going to be more so a lot of pain for the first half or first 3 quarters of 2023, then it might get better. But at the end of the day, I think a lot of institutions are saying the exact same thing. But based on economic data, because you guys know me, I like to look at the facts behind that. And right now, consumers are still out there making the money, earning the jobs, and actually paying the bills and everything like that. There's no signs of real significant cracking on the consumer front. Of course, interest rates have gone up quite a lot, so that most likely will affect actual earnings in corporations wise. But as far as a full-blown recession, that I don't feel that is going to be very much coming or very much justified based on the data. So that was a little bit more of a side tangent. So let me know your thoughts on that. And like I said, I just want to give you a quick summary of what is happening with shorts as of right now, because any stocks that do have a fairly high retail presence typically get targeted. Short score is 73, utilization is 100%. And looking on the, based on what happened on Friday, shorts did increase 722.09 thousand shares, bringing the grand total to 110.23 million shares being shorted. And short interest right now is 14.04. Cost to borrow for the most part isn't really changing there. So the minimum is 0.65%, the average 1.21%, or sorry, 1.12%. Cost to borrow max is 13.33%. So overall, fundamentally behind the scenes, it could squeeze, but most likely not. So I'm always bringing this up just as a fairly good benchmark behind the scenes. But one interesting point that I do want to bring up is just more so this. So there's currently $502.64 million of shorts out there. So that is pretty significant if you want to factor it that way as well. So potentially, depending on how much escalation does happen on the short front, there might be a squeeze in 2023 depending on some of the earnings or potential good news coming out from the economic standpoint. So once again, I think it's very optimistic coming from a investor, and I think over the last couple of earnings, it's really just solidified on how good SoFi is actually doing fundamentally, despite the actual price of SoFi and how low it's gone. So once again, this is why you should be thinking long-term with SoFi. So make sure you guys have a happy new year, do your own due diligence and all that fun jazz. If you haven't already, hit that thumbs up and subscribe. Always greatly appreciated. If you do like my channel and support the growth, take a look at my memberships. Link in the description below, or just hit the join button at the bottom of the screen. With that said, appreciate you guys watching. Let's all make a lot of money on SoFi.